Australian dollar to US dollar just popped above 0.6940 and every retail trader is piling in long. But here's the killer. The weekly trend is a firm sell, and the daily 20 MA at 0.6966 is a brick wall. The ADX is screaming trend, yet the RSI is limping. That's a liquidity trap. I've got 2 scalps and 1 swing trade mapped out with exact entries. The first scalp triggers in the next hour. Right now, Australian dollar to US dollar is trading at 0.6945, and I can tell you that 70% of retail traders are already long, expecting that monthly strong buy to rip higher. But here is the trap. The weekly chart just rolled over into a sell. The daily chart is neutral, which means it's coiled to punish the herd. There is one danger zone at 0.6966 and one hidden opportunity sitting just below 0.6930. I'll show you both. On screen you'll see it. 0.6940 trap. 2 scalps plus 1 swing. Write that down. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today before the Asia session fully wakes up. This is not a forecast. This is a battle plan. My session bias is this. We are range fading with a bearish lean. The intraday timeframes, the 1 hour and 5 hour, are strong buy, but they are running straight into a cluster of daily resistance and the weekly sell pressure. I am fading any pop towards 0.6951 and 0.6966 with high conviction, and the only thing that would flip me bullish is a 4-hour close above 0.6966. Write this number down. If we break and hold above 0.6966 on the 4-hour chart, the entire weekly structure resets and we target the 0.70 handle. Until then, I'm selling strength. Here's the micro insight. The ADX on the daily is at 40, which tells you there is a strong trend somewhere, but the daily direction is neutral, that divergence means a breakout is loading, and retail is positioned for the wrong direction. The herd is long and leaning on the monthly by signal, but they're ignoring the fact that the monthly trend is a lagging giant. It will be the last to turn. The smart money is already loading shorts below the 20 MA. Let's walk the charts from top to bottom, because this is where the levels crystallize. On the weekly, we have a clear sell signal. The weekly moving averages are tightening, the 20-week is sloping down, and price closed last week below the 60-week MA. That put the weekly structure in a bearish posture. This week, we are getting a minor bounce, and I'm treating it as a selling opportunity into that weekly resistance. The weekly MACD is below the 0 line with a bearish histogram expansion, no bullish crossover in sight, drop to the daily chart. Price is currently 0.6945. Look at the moving averages. The MA200 sits way down at 0.6896, that's the long-term anchor. The MA100 is 0.7003, MA50 is 0.7026, and the MA20 is right at 0.6966. Price is below every single major daily moving average except the 200. That means the daily trend structure is bearish. The short-term average is below the medium term, which is below the long-term slope. The RSI is at 42.3, tilted down but not yet oversold, leaving plenty of room to fall. MACD on the daily is negative, at minus 0.005, and the signal line is pressing against a crossover, but there's no buy confirmation, it's a dead cat bounce setup. The stochastic is 59.8, trying to curl up, but it hasn't crossed into overbought yet. That gives us a window where the bounce can fail. Now the support and resistance levels are critical. Pivot point is 0.6939. We are above it, barely. Resistance 1 is 0.6942, which we already broke, so a 2 at 0.6948 and a 3 at 0.6951 are the immediate upside barriers. This is a razor-thin zone, only 9 pips between a 2 and a 3. That tight cluster acts like a magnet for stop-loss hunting. Above that, the daily MA20 at 0.6966 is the line in the sand. Support side, S1 is 0.6933, S2 is 0.6930, S3 is 0.6924. Below that, The daily MA200 at 0.6896 becomes the swing target on the 4-hour chart. The moving averages are beginning to pinch. The 60 MA on the 4H is around 0.6940, and the 20 MA is trying to turn up, but price hasn't confirmed a bullish alignment yet. MACD on the 4H is printing higher lows, but it's still deeply negative, which is a classic bear flag setup. Here's what most traders miss. The 4-hour stochastics are already overbought on the bounce, and the price is struggling at the pivot. That's a trap for breakout traders. On the 1 hour, we have that strong buy signal. The MA20 is sloping up, price is above the 60 MA, and the 1 hour MACD is bullish. But the 1 hour RSI is waning near 58, losing momentum. That's exactly the moment when a liquidity grab occurs, a fast spike to collect stops above 0.6951, and then a vicious rejection. Now link this across markets. The Australian dollar is the Asia risk proxy. Look at the S&P 500 futures overnight. They are stalling at their own gamma resistance. Iron ore futures are flat, and China's offshore yuan is weakening slightly. There's no risk on conviction. So this tiny Australian dollar to US dollar bounce is running on fumes. The next signal changes everything. If the 1 hour candle closes back below 0.6933, that's the trapdoor opening for a drop to 0.6924 and then 0.6896 in the last 24 hours. There was no high-tier Australian data, but the core driver is the yield spread and the risk pulse. The RBA is still on hold, while the Fed's hawkish repricing has widened the US-Australia 2-year spread. That spread is pushing against the Aussie. Meanwhile, the market is quietly pricing in a softer Chinese CPI print expected later this week, and copper is struggling at a technical ceiling. That's a triple headwind. The Asia proxy trades on hope, and right now hope is fading. Dem Y1 to 2-week directional lean is bearish below 0.6966. I expect this relief rally to exhaust and roll over, targeting the 0.6890 to 0.6860 zone once the daily bear flag completes. The invalidation event is a weekly close above 0.7030, or a sudden China stimulus shock, but that's not in the current flow. If we see a daily close above 0.6966, I will scrap the bearish thesis and flip neutral to bullish. But for now, the risk-reward favors fading strength. Do you think the Aussie breaks below 0.6900 this week? Comment yes or no. I'm tracking consensus in real time. I read every response. Most people skip this section. That's exactly where the money is made. Keep watching, because these 3 setups are mapped to the tick. I'm giving you 2 scalps and 1 swing, all built around the trap at 0.6945. Strategy 1. The opening scalp, scalping, high probability, focus on a 5-minute structural trigger right at the resistance cluster. The entry condition is this. Price taps 0.6948 to 0.6951 zone and prints a bearish engulfing or a strong rejection wick on the 5-minute chart. That's your trigger. The logic. This is the R2-R3 liquidity pocket, and the 1 hour RSI is losing steam. Place your sell limit order at 0.6950 with a tight stop loss at 0.6960, exactly 10 pips above a 3 and above the most recent swing high. Your first take profit is 0.6933, right at S1, that's a 17 pip move, giving you a risk reward of 1 minute and 1.7 seconds. If momentum accelerates, you can trail to TP2 at 0.6925 for a 25 pip gain. This scalp is instantly voided if a 5-minute candle closes above 0.6955 with conviction. Be nimble. If price spikes to 0.6950 and just churns, don't force it. Wait for the engulfing, the opening SCLP entry, 0.6950, 5M bearish engulfing after tap of 0.6948 to 0.6951, stop loss, 0.6960 take profit 1, 0.6933 take profit 2, 0.6925 risk, reward, 1:1.7R, TP1, 1:2.5R. TP2, invalidation, void if 5M candle closes above 0.6955. Strategy 2, the liquidity grab, scalping, counter noise. This one targets the stop hunt below the pivot. The best fake-out zone sits just under S1 at 0.6930 to 0.6924. The entry condition, price sweeps below 0.6930, takes out the obvious stops, and then within two 5-minute candles, it reclaims 0.6933 with a bullish engulfing. That's the snap-back confirmation. Your buy entry is at 0.6935 on the reclaim. Stop loss goes at 0.6920, just below S3 and the sweep wick, only 15 pips of risk. The target is the nearest intraday liquidity pool, which is the pivot zone at 0.6942 and then the R1-R2 cluster at 0.6948. Take profit at 0.6945 for a quick 10 pip scalp, risk reward 1 minute and 0.66 seconds, but the win rate on fake-out reclaims in a range is extremely high. If you want more, hold to 0.6948. This scalp requires fast execution. If price breaks below 0.6920 and holds, do not try to catch the knife. The trap became a real breakdown. Invalidation. If the sweep below 0.6930 is not reclaimed within 10 minutes, stay out the liquidity GROB entry. 0.6935, 5M bullish engulfing reclaim after sweeping below 0.6930, stop loss. 0.6920 take profit 1. 0.6945 take profit 2. 0.6948 risk, reward. 1:0.66R, TP1. 1:0.86R, TP2, invalidation. Void if price fails to reclaim 0.6933 within 10 minutes. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Your answer helps me tailor tomorrow's setups. Strategy 3, day. Session swing, trend alignment. Now the session hold for those who can stomach the noise. This swing aligns with the weekly and daily bearish structure. The trigger condition. We need a 4-hour close below the 20 MA on the 4H, roughly the 0.6940 level, with a fresh bearish MACD cross on that timeframe. That would confirm the bounce is done and the downtrend resumes. Enter short on a 4-hour close below 0.6935, selling the break of the pivot and S1 cluster. Place your stop loss above the daily structure at 0.6970, just above the MA20 and the weekly resistance zone. That's 35 pips of risk. Your first target is conservative, the daily MA200 at 0.6896, which is a 39 pip move, risk reward 1 minute and 1.1 second. The stretch target is the previous swing low at 0.6860, adding another 36 pips. Once price reaches halfway to TP1, around 0.6915, move your stop to break even. That protects your capital. The invalidation that would shift the medium-term outlook is a daily close above 0.6966. If that happens, the swing short is dead and we look for longs above 0.7030. This swing trade is about patience. It might take 48 hours to play out, but it's the highest reward setup on the board. The session SONG entry, 0.6935, 4H close below 4H20 MA, bearish MACD cross, stop loss. 0.6970 take profit 1, 0.6896 take profit 2, 0.6860 risk, reward, 1:1.1R, TP1, 1:2.1R, TP2, invalidation. Void if daily close above 0.6966. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I never let a scalp run into a loss bigger than 0.5% of the account. No positions through high-impact news like RBA minutes or China CPI. Stops are non-negotiable. If 0.6960 gets hit on the scalp short, you're out. No hoping, no flipping. This is how you survive to trade the next big move. So the single most critical level for the next session is 0.6966. That daily MA20 is the gravitational center. As long as price stays below it, bears have control and every bounce is a selling opportunity. If it breaks and closes above, We rip the whole script and the monthly strong buy reasserts. Tomorrow, I'll be watching the China CPI release and the European risk open. If the data misses, the Asia proxy could freefall right through 0.6900. If this level breaks, the whole monthly trend credibility cracks. I'll have the updated blueprint 24 hours from now if you want the full breakdown on Japanese yen and the Bitcoin or commodities divergence. These videos are live now. Tap the end screen on your screen right now. Then hit the bell so tomorrow's alert lands before the Sydney Open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. We are 8 assets deep, every session, no fluff, just the trades.